Hello everyone, this side Dhruv Chadda. First of all, Happy New Year to everyone. I hope you all are working hard towards your goals and by the God will, you all may succeed. So basically, I've been trading engulfing and SNR concept from past 2 years, and with the help of my mentors and my friends, I can proudly say that I have solved my puzzle and I want to give back to my lovely trading community. So I have decided to make new videos every week going deep dive into the engulfing concept, combining together with the SNR. So one of my mentor said to me that learning and understanding of an concept are two different things. So the motive of these videos are going to be that you guys can have better understanding, a deep understanding of how these concepts work and what's the real transaction happening behind those candles. I've seen many people, they just grab those patterns and just go to the charts and start marking up without knowing what's actually the transaction behind those patterns, right? So the motive of of these videos are going to be giving you much deeper insights of this concept. Okay. This is my first time recording a video, so please bear with me. Uh, so this is going to be the first video. And this is going to be the basic foundation of this concept. And please make sure you don't skip this part if you are new to this concept. And even if you have a deeper understanding or you have been trading this concept for long, I request you to watch this video as well because I'm gonna be talking about two to three things that might be new to you also. Okay, so the things I'm gonna be covering today is what is an engulfing. Okay. The second thing is like what really forms up a engulfing candle by or a cell. Okay. I'm gonna be going into the OHLC also. Uh, Today I'm gonna be covering up the basic foundation that is needed to go further. So the another thing I'm gonna be discussing is what is the price action that forms up on lower time frame once engulfing by or a cell forms up. Okay. And the third is types of engulfing. So without wasting time, let me just go through. Okay, so this is the first slide, and I know this is very basic. You all know that a bullish candlestick simply have a open, a low, a high, and a close. This is how a bullish candlestick forms up, and this is the vice versa for the sell candlestick. Okay, so this is how it's looked like on OHLC. This is the low, this is the open, this is the high, and this is the close. And for the sell candlestick, we have a open, we have a high, we have a low, we have a close, right? This is the basic, very basic concept of OHLC, right? And make sure you don't skip this part because this OHLC concept is what I'm gonna be using in my further videos explaining the transaction behind those candlesticks, right? So even though it's a basic, but it is also an advanced. So this is basic, which is advanced. So the second thing is now let's go into the bullish engulfing and bearish engulfing. What is an bullish engulfing and what is an bearish engulfing? So a bullish, in the case of bullish engulfing, the only requirement that we need is if there is a bearish candlestick, okay, and the high of that bearish candlestick is being engulfed by a bullish candlestick with a closer. Make sure to keep in mind that we need a closer above the previous bearish candlestick high. We don't consider wick as a closer. Okay, we need a body closer to consider that this is a bullish engulfing. Okay, and for the bearish engulfing, the only requirement that we need is the low of the bullish candle should be engulfed by a bearish candle with a body closer. Okay, so that's what we call as bearish and bullish engulfing. The only thing to have in mind is that we only work with the body closes. We don't consider wick to be as an engulfment. Okay, so now I'm gonna be adding up this simple OHLC concept with the bullish engulfing and the bearish engulfing. This will give you a much deeper insight. What does engulfing really signifies? Okay, so this is the case for bullish engulfment. Okay, so we have a open, we have a high, we have a low, and we close. This is a bearish candle, and then we have a open, right? This is the open. We have a low, we have a high, and we close like this. So simply, I just have marked the OHLC, the open, high, and close and low of the both candles, and this forms up what is it telling us? So this is simply telling us there was a support over here that pushed the price higher, and there was a resistance that pushed the price lower. So we are actually breaking a resistance and pushing higher, and we are also breaking this resistance that pushed the price lower. So we have two breakouts to the upper side that actually forms up a bullish engulfing. So basically, it telling us uh, that uh, it is telling us that weakness is coming into the market. From weakness, I mean weakness for the opposite trend of market. So we are simply having two breaks from the opposite trend, and that basically means that a reversal can actually happen. Okay, so two breakouts from resistance is eventually means that market can eventually reverse from here. Okay, so this is what how we use OHLC with the engulfing concept. Simple, right? But a lot of people don't really pay attention to this. Okay, and for the case of bearish engulfing, we simply breaks out of two support areas, which basically forms up a bearish engulfing pattern. It signifies that a sell trend, a sell momentum is coming into the market, right? Okay, so this is all about combining OHLC with the bullish engulfing and bearish engulfing pattern. And what does it signifies us? Okay, now let's look into the concept of SND. So basically, supply and engulfing comes under the supply and this demand concept. So basically, engulfing, a bullish engulfing can be a rally base rally. Okay, so this is the bullish engulfing. So this is the base. So it can be a rally base rally. For those who know the SND concept, this is very basic, right? And a bullish engulfing can also be a drop and a base and a rally. So this is our engulfing buy. So we eventually expect market to come back into the zone and go higher. Same for this, uh, same for this example. We have a rally and a base and a rally. So when we are coming into the market, we expect what? We expect a bullish movement, right? And this is the vice versa for the drop base and rally base drop. So this is our engulfing cell. So this is drop and this is base. This is drop. We can simply see over here, we have a drop, we have a base, we have a drop. So now, what do we expect? We simply expect, we mark this zone, we simply expect from the market to come into this area and give us a fall. I'm not talking about the current market transaction and confirmations. I'm not really going into that for now. I'm just covering up the basic foundation for now. Okay, so this is the rally, this is the base, and this is the drop. So simply engulfing concept that we are simply using is just a part of supply and demand concept. Okay, and now we are going to talk about what is engulfing field. From the name itself, it tells us that when the engulfing zone is being ignored or being failed is simply engulfing field. Let me give you example. So this is a engulfing buy, or you can say a rally and a base and a rally. So this forms up a engulfing buy. And when markets come into the zone, what do we expect? We expect price to go higher, right? But what do we see now? We see a body closure. We have closed like this. We are closed below the low of bullish candle. Okay, sorry, bearish candle. So this is what makes up a engulfing failed. So when engulfing buy zone is being ignored by the market is what we call as engulfing failed. So now when it fail, we expect market to come into the zone and and expect a fall. We have another example over here. We are buying, right? We have a base and we have a buy. So we simply the requirement for engulfing buy is being met, right? Because this bearish candle high is being engulfed with a bullish candle body, right? So now what do we expect? We expect price to go higher. But what do we see? We see price close below the zone. That makes us, that simply makes our engulfing field over here. This is what we call engulfing field. I hope you all understand this thing. This is very basic. If you don't, please watch this video again. Now we are gonna be talking about how does engulfing candle forms up on lower time frame. This is very important. A lot of people never pay attention to this or never been taught. Okay, this is how the bullish and bearish engulfing forms up as per the Chelsea concept, right? So now we are gonna be seeing this concept based on lower time frame. Okay, so there are two scenarios happening when engulfing buy or a sell forms up. In most cases, how does it forms? This is the first case, and what is an exception? Okay, so in the first case, let me just give you the example on live chart. So we are on a daily chart of gold, okay, and this is a clear example of what sell engulfing, right? Engulfing sell. So if we look into the one time frame low, we are going to see an engulfing field forming up. Let me just once again go back into these slides. So in lower time frame, engulfing field happens, then we eventually makes up engulfing sell or buy on higher time frame. Okay, let me just repeat it. So if there so engulfing sell or a buy forms up when there is a engulfing failed on lower time frame, 1 or 2 time frame low. Okay. Uh, So let me go to the example again. So this was a daily engulfing cell, right? So what we see there was engulfing by, right? There was this engulfing by, and there was this engulfing by, right? So all this engulfing by has been failed, right? That makes up our engulfing cell on the daily time frame, right? This is an example of a perfect engulfing. Let me just go for the classic one too. So we see a engulfing cell again. Why does it? Why is it a engulfing cell? Because it met our condition. So simply, when law of bearish candle is being, sorry, when the law of bullish candle is being engulfed by a bearish candle, let me just change the colors. It, I don't know why it can be a confusing. Mm, no. Uh, okay, cool. Now it's more uh, simple to see. So this is a bullish candle, and we have closed with the bearish candle with the body closes. So simply this is a bearish engulfing, right? So if we look into the lower time frame, what do we see? What do we see? Okay, we simply see that. Let me just erase this out. We simply see that there was an engulfing by that has been failed. This is an engulfing failed. We had another engulfing by that is being broken. So that makes up a engulfing cell on the higher time frame. I can go for the H4 time frame too. Okay. Okay. So let's look into this example. We have a H4 engulfing by. So let's go one time frame low. Let's see what's happening. In one time frame low, we see that there was an engulfing cell which is failed with the body closure. So engulfing failed happened and that forms a H4 engulfing by, right? I hope you all are getting my point over here. So now that we know that there, in most cases, we will have engulfing field on our time frame that will eventually make an engulfing buy or a sell on higher time frame. So what does it signifies? So simply it tells us that a breakout is happened when we form engulfing buy or a sell. So simply telling us that there is some sort of reversal happening when we see a engulfing buy or a sell. I have discussed this thing based on the OCLC concept, and I have simply discussed this thing with the formation of lower time frame price action too. So both those concepts are actually telling us the same thing. We simply get a break, and that when we forms up a engulfing cell or a pie. Okay. Um, so this is very basic, and this is also very advanced because I've never seen a lot of mentors talking about this thing, or just they simply ignore it. Okay, so please make sure that you uh, backtest this thing on the live market or on the charts so that you get much more deeper insights, right? Okay, let me just go into the next part. So, what is an exception? Sometimes you won't see a engulfing field happening when a EG cell or EG forms up. So why does that happen? Okay, so let's take an example. Let's say we have 1 hour candlestick. So for a 1 hour candlestick to form, we need four candlesticks of 15, right? Right? So let's take an example. We have this bullish M15 candle, have this bullish engulfing candle, and we have this bullish engulfing candle. And this is the last fourth bullish engulfing candle on M15. If we add this up, that basically means that 1 hour candlestick has been closed. So how does it closed? It simply closed as a bullish candle. So let's see a next candlesticks opens up. So on next candlesticks, what do we see? We simply see that a continuous series of cell candles forming up. And this is the fourth candlestick of the M15. That basically means that the 1 hour candlestick has been closed, right? So as per the uh, condition for forming up a EG cell, it has been met because the low of the bullish engulfing candle, this adds up as a bullish engulfing, bullish candle has been engulfed by a bearish candle on H1. So that basically means that there is an EG cell forms up. And now what I talked about earlier was that what I said about earlier is that we have engulfing fail happening on the lower time frame to forms up an EG cell or EG buy. But on this example, we don't see a engulfing fail happening, right? So this is an exception. But if you look closely into the charts, I will talk about the dominant area and hidden base later on. So simply this is an hidden base and this is also a dominant area. Hidden base and dominant area is basically the same thing. So this is an dominant area as well. So we see that price actually engulfing those areas. These areas are simply what? This is a rally, this is a base, this is a rally, this is a base, this is a rally, this is a base, this is a rally, right? So if we go lower into the lower time frame, we will eventually see a sell candle or a base forming up. This is an M15 candlestick. So on M1 or maybe an M5, we will see a sell candlestick. So this is how it's gonna look. A sell candlestick on M15, or sorry, on M5 or M1 happening. So eventually, when we forms up a EG cell on H1, we do have breakouts happening. We eventually engulf all these areas while forming up a EG cell on H1. It can be same for the H4, it can be same for the daily, right? So, so on this exact exception, the simple, to make it simple, you won't see a engulfing failed one time frame lower. But if you look deep into the projection, there are base that been getting broken. These bases are getting broken, which is eventually a breakout, right? These all are breakouts happening. You won't see a clear engulfing field, but that doesn't mean that breakouts are not happening. Okay, so this is the exception case. Till now, I have covered OHLC, how to combine for what is in bullish engulfing, what is bearish engulfing, how to combine OHLC with the uh, engulfing concept, and what does it signifies, right? So, for the case of bearish, and what simply is bullish engulfing versus bearish engulfing is, so it simply is rally based rally or drop based rally or drop based drop or rally based drop. Okay, what is engulfing failed? I hope you all understand this. How does engulfing candle forms up on lower time frame? I have covered the first scenario, which happens in most cases, and what is the exception. Okay, I hope you all understood what I have covered right now. So now let's go into the types of engulfing. The classic engulfing pattern. The classic engulfing pattern is the simply is just that the requirement for engulfing to happen has been met. Okay. Um, okay. So for in this case, let me go to the chart. So in this case, for this to be a bullish engulfing candle, the high of the bearish candle is being engulfed with the body closer. So that we basically call as a classic engulfing candlestick, classic engulfing pattern. Okay. For classic engulfing pattern, we don't really have any uh, requirements to met. It's just that we just need um, a closer above the high of previous bearish candle and a closer below the uh, candlestick of bullish candle, right? There is no other requirement that is needed for a classic engulfing pattern. So now let's go into the second engulfing pattern, which is called blend engulfing. So blend engulfing simply means that when so this is an example of blend engulfing. Let me just um okay. So there is an bullish engulfing candle, right? So for a bullish engulfing candle, let's say on H1, right? And these all four candles are also on H1, right? So the low of this bullish candle is being engulfed by a series of two or more bearish candles. So when price take two or more candles to break a certain low or a high, in it depends on the case. So that's what we call as blend engulfing candle. Okay. So simply when two or more candlesticks take and low of a bullish candle, that's what we call as blend engulfing, and it will be the vice versa case for the um, bullish engulfing candlestick. There's something important to uh, cover on this. So maybe I will cover this in the later part. So simply what I mean is, let me just go to the charts again. This is an this is an bullish candle, and this is an bearish candle. So it took three bearish candlesticks of H1 to close below the low of bullish candle, right? So this is what we call as blending engulfing. So we will mark this whole zone as engulfing cell. Okay. The important thing to uh, look at is if we look at the transaction of these candle, what do we see? We see a base, sorry, a drop and a base and a drop and a base and a drop, right? Okay. So the low of this candle was actually being engulfed by this hidden base. So this hidden base or a dominant area is very, very important to monitor because this base was the reason that the low of this candle is being taken. This right? So this is a very significant area, and I will discuss much more deeply into this in the later classes. So we will simply monitor this area and look for trades for sell. Okay. So this is an example of blend engulfing in the case of bearish engulfing. So it's gonna be the vice versa in the bullish engulfing case. We can have multiple bullish bullish candlesticks forming up. So we have multiple bullish candlesticks forming up that engulf the high of the bearish candlestick, right? So this is what we call as blend engulfing. And in this case also, this area is very important to monitor when price pullbacks. Okay, I will talk deep into this uh, concept later in the classes. We are now talking about zones, marking up our zones and confirmation and all that stuff for now. Okay, so this is the second type. Let me just see on the chart if I have a clear example. Okay, here's the example. What do we see? We see that this bullish engulfing this bullish candlestick low is engulfed by a series of two candlesticks of bearish. Okay, series of bearish candlesticks. So it took two candlesticks of bearish to take out a low of this bullish candle, right? So this is what we call as blend engulfing. Let me see an example for the by two. Um, okay, here's the example for the blend engulfing for the buy. This is okay. We have a bearish candle before a break this high. So let's not take the example for now. I will discuss about this thing again. Uh, okay, here's the example. So this was a bullish engulfing. So it took two continuous series of bullish engulfing candle to take out the high of bearish candlestick. So this is what we call as blend engulfing buy. Okay. So I have discussed the two types for now. And now let's go into the third type, which is perfect engulfing candle. Okay, so perfect engulfing candle basically means that when a low, okay, where's the marker? Okay, I can't draw on this. Okay, let me mark on this. When the low and the high of previous candle is being engulfed by the next candle, that is when we call it as a perfect engulfing candlestick pattern. Let me repeat it. So when low, uh, let me just go into the chart. Okay, let me see. Okay, here is an example. So this candle high and this candle low is being engulfed by the next candles is what we call as perfect engulfing candle. Okay, and let me see if there is another example. Mm, okay, so when it is not a perfect example, perfect engulfing candle. So you can see this was a buy, right? So this is a sell candle. So the low of this candle was not engulfed by the next bullish candle. So we will not call it as a perfect engulfing candlestick. In order to for it to be a perfect engulfing candle, the low should also be engulfed, right? So we have two requirements when a perfect engulfing candle forms up. One is that a high should be engulfed and another is low should be engulfed. In the case of a classic engulfing pattern, we just need a high in case of bullish engulfing, and in the case of bearish engulfing, we simply need a low being engulfed. But on the perfect engulfing pattern, we need the high and the low to be taken out. Okay, let me just mark this up thing. Uh, okay, so here's something to mm, to keep in mind that a perfect engulfing candle, in the case of bullish engulfing, okay, perfect bullish engulfing, the low of the previous candle can be engulfed as in the same exact area. Okay, so this low can be engulfed at the same exact area to be called as perfect engulfing candle. Okay, it can also be like below the low of previous candle, or it can be at the same exact level at which the low of the previous candlestick has. Okay, and in the case of bearish perfect engulfing candle, in the example of bearish engulfing candle, the high can be engulfed at the same area or can be above the high of previous candlestick. Okay, so we can call it perfect engulfing candle as this, and also can it can also be at the same exact area. We will call it as a perfect engulfing candlestick pattern. All right. The reason I'm talking about this is because on the next type, I'm gonna be discussing the QM engulfing pattern. So, so let's go into that part. So we have discussed the perfect engulfing. Now there is the fourth one, which is Quasimodo engulfing pattern. For those who don't know what is Quasimodo, simply a Quasimodo is like this. When the high and the low is being engulfed, that's when we call it as a QM pattern, and we simply expect market to go lower in this sell QM pattern, and for the buy, it's vice versa. Okay, you can look into the you can go into the YouTube and look for this pattern and learn about it if you don't know about. Okay, so in the case of Quasimodo bearish engulfing pattern, we simply need that the high of previous candlestick should be engulfed and it should be higher than the previous candlestick high in order to say that this is a Quasimodo engulfing pattern in case of bearish. Okay, let me just repeat it once again. So in bearish case, to call it as a Quasimodo engulfing pattern, we need the high of this bullish candlestick to be engulfed way higher than the previous high. Okay, it cannot be at the exact area of previous candlestick high. It should be higher than that to call it as Quasimodo engulfing pattern. Why do I say that? Let me just put in marker. So this is how the OHLC will look like. This is the open, this is the high, this is the close. Oh, sorry. So this is the open, this is the low, this is the high, and this is the close for the case of bullish uh, candlestick. And for the bearish candlestick, this is the open, this is the high, this is the low, and this is the close. So what do we see? We simply see Quasimodo pattern forming up. This high is being engulfed, and this low is also being taken out. I don't know why the marker is walking like that. Let me go to the PowerPoint. Mm, okay, here's the example of perfect of the Quasimodo engulfing pattern. So the high is being taken and the low is being taken, so it's being engulfed by the next candlestick, right? The important thing to keep in mind is that the high next candle high should be higher than the previous candle high. So it's high, right? So what does it form? This forms up a left shoulder. This forms up a apex. So for those who know the Quasimodo uh, pattern, so we simply trade these two levels and expect a move to the lower. We expect a move to lower side, right? So this engulfing pattern, this QM engulfing pattern is quite powerful. The perfect engulfing pattern and the QM engulfing pattern both are quite powerful because uh, we simply met a requirement for the QM. And let me just now let me just tell you one thing that every QM engulfing pattern is going to be a perfect engulfing candlestick. But not every perfect engulfing candlestick pattern is going to be a QM because the perfect engulfing candlestick can have high at the same area, right? But for the QM, we need the high to be higher than the previous candlestick high, right? I hope you all understood this thing. Um, I'm new to the teaching, so maybe I'm not really able to deliver the thing that I want to. So make sure to watch this thing 2 to 3 times so that you can understand this thing. Okay. So now we have covered the 4 types, right? Now there is another type which is called gap engulfing. So gap engulfing is simply like this. We have a bullish candlestick and this is the high, right? So another candlestick forms up somewhere over here and touches even the it never touches the close of previous candlestick. Okay, so this is simply a gap area. So mark this as you could mark this as whole zone like this. Okay, wait. You can mark this whole zone as a gap area. Okay, there's nothing much to talk about this thing. You won't see this thing happening much into the charts, especially in the forex market. But on the stock market, you will see gap engulfing pattern forming up eventually. Okay, so this is gap engulfing. Now here's come my special type engulfing pattern. Uh, n- I've never seen a lot of people paying attention to this pattern, but it actually meets. all the requirements that are needed for it to call as engulfing. The special type I'm talking about is same color engulfing, same color, same color candle engulfing. Let me just show you one example. Okay, before I talk about this special case, I want to give you a live example of Quasimodo engulfing pattern. I have a good, good example for it. Okay, let me just delete everything. Okay, so here is the perfect example for this. Okay, so over here, if you look closely, what is this? The high of the high of the bullish candlestick has been engulfed, and the low is also been engulfed, right? And also, and also the high of this previous candlestick, this bullish candlestick, is being engulfed way higher, right? So we will call it as QM engulfing pattern. Now that we are saying it as a QM engulfing pattern, that means we will eventually see a QM formation happening. So let's look into the lower time frame. Is there a QM over here? Okay, what do you see? You see this is high, this is low, this is higher high, and this is lower low, right? So the high is being engulfed and the low is being engulfed. So the requirement for the QM has been met. So that is why we call it as a QM engulfing pattern. Okay. So now if you want to see it more clear, let me just show into the line chart. So this is what we call it as left shoulder, and this is what we call as apex, right? So we expect what? We expect market to eventually react from here and go lower, right? What do we see? What do we see? Price eventually broke out of this area. Let me just go back into the weekly chart again. Okay, sorry. So now previously I talked about engulfing failed. So you see that the body of this candle has closed above the engulfing cell zone. So that what it makes a engulfing failed area. So so sorry for the disturbance. So this over here is what we call as engulfing field, right? And this engulfing field was a QM engulfing field. So now if we look into the daily chart again, we simply see that this left shoulder has been ignored, right? Okay, this left shoulder over here has been broken. So in terms of SND or SNR, we simply say this is an ignored level, and the apex has been also been broken. So this this is the conclusion that SNR and engulfing is basically the same thing, right? This is actually the perfect example that I can give you right now. This is the perfect condition that has been met, right? And I also talked about hidden bases. So we had a hidden base aligned together with the left shoulder. So we could have taken opportunity over here for the longs. And eventually we see we have a engulfing by being formed. Okay, I'm getting little distracted from the uh, foundation. So let me just go into the basics for now. I will talk about entries, direction, and everything later on further videos. So this is the perfect example for QM engulfing, right? Okay, let me okay, cool. Uh, Once again there is an example. This is a bullish engulfing, right? This is a bullish engulfing. So on daily we see what? We see a engulfing fail happening, right? That on lower time frame we had a engulfing fail. That's why a bullish engulfing pattern formed on weekly, right? Okay, I hope you all understood till now. So now let's talk about the special type. The special type which I'm talking about over here is having a same color engulfing pattern. Uh, Let me just quickly give you an example. But before that, I want to tell you that same color engulfing pattern should be a perfect engulfing candlestick or a QM engulfing. Okay, I will tell you the reason behind it. So let me see some examples. I had an example. Okay, um, let me go. Okay, okay, I got an example for this. Okay, so here is an example of same color candlestick pattern, same color engulfing candlestick pattern. So this is an okay. So here is it. What do we see? We see a bearish candlestick, right? So the bearish candlestick high was over here, and the low was over here. So the high of this candlestick was engulfed by a bearish candlestick, and the low was also been engulfed by a bearish candlestick, right? So we can actually mark this as a bearish engulfing. Okay. The reason for that is if we look into, uh, let me just screenshot this. If we just look into as per the OHLC, right? Okay. As per the OHLC, this was the open, this was the high, this was the low. Okay. So this was the open, this was the high, this was the low, and this was the close. And again, a new candlestick forms. This was the open, this was the high. Okay. So what is this? Uh, what is it forming? So we can actually see that the the high was also being engulfed, right? And the low was also being engulfed with the body closer. Okay. So this is forming up a QM. So a QM is basically an engulfing pattern too. So we can call it as a engulfing cell. All right. Just because the high was also being engulfed and the low was also being engulfed. So this is basically a engulfing cell. Let me just look into some another example as well. Mm, Okay, here's the another example. Mhm. Okay, you say that the low and high both were being engulfed by the next candlestick. So this is basically what? This is basically this is basically a QM formation as per the OHLC. So we can so the all the requirements for uh, calling it as a engulfing is being met. What are the requirements to call a pattern an engulfing pattern is simply that the high of the previous candlestick is being engulfed with the bullish closure. So in this case, it took two candlesticks to call it as a to to say that the high was being engulfed and the low was also being engulfed by the previous candlestick. So we can call it as a bullish engulfing zone. And now you can you can either mark this as the whole engulfing buy and you can also mark this zone as engulfing buy too. Okay, so you see price tapped into it and gave a reaction. Okay, uh, okay, so here over here you see this thing. You see this was what people would have waited for. This is when people would have waited for engulfing buy to form, but it never formed because the high of this cell candle was never been engulfed with the body closer. But over here we had what? We had a same color engulfing pattern, right? And on the CNP we later had a daily engulfing buy. I will not talk about this thing now. So you could see that uh, people would have thought that we have a cell over here, right? We have cell engulfing over here on the daily. So we didn't form a bullish engulfing. So price will eventually just ignore this thing and continue to go lower. So if you would have known that there is an engulfing, which is a same color engulfing, the requirements to say this as engulfing is being met. So you would have marked this as a zone. Okay. So this is the last type of engulfing that I use. I hope you all understood what I have said. And please make sure to watch this video two times and watch it on a speed of maybe 1.5x because I'm speaking a little slow. Okay, so now this is where this first topics end, and now this is what I'm going to be cover on upcoming videos. Uh, I will make some changes into it. This is not exactly the things I'm gonna cover because I just made this slide last night, so I can make some changes over here. So the first thing I'm going to talk about in the next video is storyline and direction. This is my backbone. This is the backbone of my strategy. This will actually answer your all question. This is very, very important. Multi-time frame alignment. You will learn how to align the multi-time frame so that you can make better decisions. How do we know that a certain zone is stronger than the other ones, right? How do we know a setup is a continuation setup that could actually give you 300, 400, 500 pips, or it just a pullback and you might get taken out, right? You will, before entering a trade, you will know either it's a continuation setup or a reversal setup. And also, I will be talking about how to combine engulfing with the SNR to determine the storyline and direction more better. You will actually uh, I'm very sure that once you watch this video, the all the confusion about the direction and storyline will be solved. Okay. On the third video, I will be talking about how to be flexible with time frame, when you have to follow the SOP and when you should not follow the SOP. Okay. I've seen people that facing this issue that sometimes you have a confirmation zone marked up, right? But price never comes into it. I will actually tell you what's the reason behind it, and how to be flexible with time frame. This is also very, very important video. Roadblocks. This is very important too. How could roadblocks change the direction of market? I know you all have learned that if there is a daily to daily, price will eventually go to the daily, right? If price have reacted from a certain level of daily, it will eventually go to next daily area. But if you have actually traded a little bit on the live market, you would have actually experienced that it it is not always the case. You won't see that happening most of the time. I will talk about this thing also. Why does that happen? Okay. And the fourth video I'm gonna be talking about is how to be prepared for multiple scenarios even before the week start. How to project next weekly candle highs and lows before weekly starts. This is actually a the source, but it actually you don't really need this thing. But I would say that just it will just give you a better confidence into your trades, that you can actually project next week high and low of the candlestick of a weekly candle. It and and I want to say that it's not 100% sure, but you will get a rough idea how could the next weekly candlestick will form, uh, where it can forms up its high and where can it forms its lows and where it could close. Okay, it's not 100%, but I have actually projected multiple times with well accuracy. So yeah, I am very sure about this concept and how to be prepared for multiple scenarios. From that I means, let's say, from that I mean that we will have different plans to work with, right? Okay, so if a plan A doesn't work, right, we will have a plan B to work with. If B doesn't work, we have a plan to C. So eventually, when you go into the market and you see sudden movements happening, you will not be thinking like that. Why does that happen? Why does that specific move happen? Or you will not be like blind, like about your trading decisions. You will eventually have multiple plans to work with. If a certain zone gets broke, what you gonna do? If a certain brokes hold, what you gonna do? If your price is reacting from a road broke, what you gonna do? How you gonna handle that position? If your uh, trade breaks up a roadblock, how you gonna handle that position? Where you gonna put your SL? So all these things I will try to discuss on this part. Okay. And the fifth thing is price closure. How does price closure of candlestick can decide next day or next week or month direction? Uh, I have this is something actually I never seen mentors talking about. They simply don't really teach this thing. And actually, I have to take permission from my mentor too, so that I can share this thing. Uh, I'm not really certain that I will teach you this thing, but I will try my best. Okay. And the sixth part is gonna be entries and confirmation. And here I'm gonna talk about my setups that I follow. The one is aggressive, the one is low time risk. Okay. What are my first entry models? What are my re-entry models? What I need to see that so that I can re-enter. Okay. And I'm gonna be talking about one of my favorite app setup that have the highest win rate for me. I'm not making any promises that it's gonna be the same for you, but hopefully. Uh, so the next thing is where we could take direct entries. So this is simply the having the first entry and re-entry models, and when you have to wait for the confirmation. And also, this is very important. Sometimes you all follow the SOP like you have H4 zone and you guys wait for M30 to give you a confirmation, but just price just leaves you behind without giving you a confirmation. So how to be flexible about the time frame? This is what I'm gonna be covering about here. There are some subtopics that I will cover too. Uh, when to use lower time frame and when to avoid. Okay, trend lines. I don't really use trend lines much, but because it's just a subjective part, for me at least. Uh, but there are two to three types that I use and they work well for me. They are not subjective. They I have tried to make them as objective I can. So I will talk about the trend lines too. How to use during the confirmations, how to use it for the confluences, precising our zones. This is a top topic. Okay. News trading, be how to take trades during the news. There is a lot about this thing also. And the last thing is confluencing, adding everything we have learned so far. So this is gonna be a holy grail kind of thing. So we will eventually add everything we have learned so far into our trades to make better decisions. And I'm gonna be talking about risk management too. Mm, It's more risk management is more personal, but I will talk about when you can take more risk and when you should take less, and what should be the SL for a certain trade. Okay, and when you can put a break even to your trade. Okay, so I'm really excited for the further videos. I hope you learned something from this video. Have a good day, everyone. Meet you soon.